Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Thursday. It's November 14th. Hope you guys are having a great day today. We got just a couple items here on the economic calendar. We'll start off what we get every Thursday, the weekly jobless claims. So last week we had 211,000 people applying for unemployment, which is a nice low number. Forecast is supposed to have a slight uptick to 215,000. Actually, had a much bigger uptick to 225,000. This is pretty much a 5-month high, so obviously this is something we want to keep an eye on to see if this is going to continue to rise or not. Now we are heading into the holiday season, so we do seem to get a lot of seasonal jobs. So we may have some misleading numbers that could, potentially, because part-time jobs do count as jobs creation. So we'll have to kind of watch through it. So usually we'll get kind of more of a truer number once we hit around February. But this is something we'll definitely want to keep an eye on for weekly jobless claims to see if this starts ticking up, because that's usually a prelude to a recession. Now, we also got the producer price index. This is the inflation numbers on a wholesale side of things. So this is something we do watch, but it doesn't carry as much weight as the consumer ones, like the CPI and the PCE, because sometimes even though the cost may rise on the PPI, it doesn't mean it always gets passed on to the consumer, and that's kind of why it doesn't have as much weight. But sometimes, obviously, when they reach certain levels, they have to pass it on. Back in September, and according to PPI, it dropped 0.3%. Forecast was calling for 0.3%, and it actually exceeded that 0.4%. So it's year over year went from 1.4 dropped, if you could believe that. So here we have a rise, and the year over year actually dropped from 1.4 to 1.1%. So that's a pretty significant drop. Now, when you take out the food and energy from it, we get what they call the core PPI. This is really the numbers that we look at primarily because it's those are variables we can't control, and we like to see items that we can control. So we look way more on the core. So like the other one, it dropped 0.3% in September. Forecast called for 0.2%, and it went up 0.3%. So higher than expectations. Like its counterpart, it dropped from 2% year over year down to 1.6%. So some pretty significant drops for these two, even though the month of October it went upwards. So let's take a look here at the headline news. Stocks are down so far this morning. Investors are getting a little bit wary of this whole talk about, we had such a build up about a phase one coming in and for U.S.-China agreement, and it seems to be kind of being prolonged. And it seems like they're at a stalemate where a lot of it has to do with the tariffs. China wants us to roll back more tariffs, and I think we had some arguments regarding the amount of soy or agriculture that they're supposed to be acquiring, and it seems like those are some sticking points. So there has yet to be announced agreement yet, but nothing as of yet, and investors are getting a little bit of worry about something getting done, or at least in a timely fashion. So this whole build-up for a while on the stock market has been inflated due to optimism about agreement being done. Now it's kind of working its way backwards. We also got the Fed chair. He's speaking, giving his second day of testimony to the Congress. Today will be a House. And then we do got a few of the Fed speakers will be out later today. So the Fed did have impact yesterday. The Powell's comments yesterday had an impact on the markets. Now, we don't anticipate him saying anything different than yesterday, so we pretty much kind of have an idea. What basically stated was that unless there's a significant drop in the market, he doesn't anticipate any more rate cuts or any changes to the rates. He thinks we're kind of at that stage where we should be, and until we see something different, he'll kind of wait and see type of thing. So let's kind of jump ahead, see how this is playing on the bond market. Sorry about that. Bond market's turning out. We're up about 19 base points, but we got a triple layer of overhead resistance. We got the 100-day, we got the 25, and we got the 50-day moving averages all just above us, creating this one big ceiling. And it will make it that much more difficult to try to break above. So right now we're enjoying some better pricing in terms of mortgage rates, but we are up against a very tough resistance of basically 3 layers of resistance to try to break above. As you see, we had that little stochastic crossover once we kind of got into this layer of overbought position, and here we got oversold position. Now we're in overbought position for yields, and now we're kind of dropping down. We're down to about 1.83, just a hair under 1.83. And bonds, we're still kind of approaching the 100-day. We're still a little bit away from the 100-day moving average, but we're approaching that level pretty soon here. All right, so that's pretty much a wrap. If you guys are looking to buy or refinance, I'd love to be able to talk with you guys. I'm a mortgage planner with Pinnacle Home Loans, and best way to reach me is direct message me or email me. Email is the best way. All right, you guys have a great rest of your day. Thanks so much for watching. Catch you guys tomorrow. Bye-bye.